If you're looking for professional day trading education and high level trade analysis and dissection, you've come to the right place. My name is Pat Mitchell. I've been a professional day trader for the past 11 years, and I'm here to bring you exactly that professional day trading, all here for free on YouTube and on X. And tonight we're going to be going over risk profiles in trading, when to go long, when to go short, when you can't go long, when you can't go short. And I'm also going to be dissecting a chart that I traded multiple times on SPY here today. There was also a fat finger, so we're going to discuss that, and let's rock and roll. I hope you all had a wonderful day. Give me one quick sec to get this all fired up and loaded up. There we go. Now, one more quick sec. Hey, folks. Okay, let's get into it. So, really, we're just going to be focused on SPY. Q's was a fat finger. As I was dragging my mouse up, I accidentally clicked. I was actually hovering over the buy button, which I rarely do. I'm usually pretty on the ball with that. I like to set my mouse right here, right where it is, and then right here if I'm up on this upper order manager. But today I was actually hovering on the buy button by accident. And as I went to move it up, I clicked it, noticed it, and immediately just took it off. It immediately started going in the direction that I entered. So that's why you're seeing a plus $600. So ended up kind of like smoking the top on it. But still took it off. If it's not a trade that I wanted to take, I get out of it. And that's a big lesson that a lot of people could learn from. There's a lot of times where traders will make a mistake and they'll fat finger an entry, and it's not a trade that they wanted to be in. And what do? They end up staying in it. And I'll give you an example. Let's say you are looking to go long, okay, into a on a chart, and as soon as you enter, um, you you're immediately red, and then all of a sudden it starts turning out, and you kind of fat finger. You're in the wrong side of the position, so it wants to sell off. You want to go long, but you fat fingered and you went in short, but it's selling off just that little bit more. Instead of clearing out that position, what do? You hold because you're making money. Now, what happens? Well, the long was correct, and it ends up going against you, and it turns into a bloody mess. Long story short, if it's not a trade that you were willing to take and had a trade plan for, get the fuck out of it. It's absolutely not worth holding, because all you're going to do is, number one, you're not prepared for that trade. So you're gonna look at it from an emotional standpoint, and you're gonna fuck it up. So it's just something that I see a lot of new traders do, or a lot of struggling traders do. It's because they start making money, and it's like it's not even the position that they wanted, that they continue to hold. So just a quick little reminder: get out of it. If it's not a trade that you want to be in, get out. So now let's discuss this trade for people that are just joining us here on this channel. These blue levels, or any level that you see struck on the daily chart or the 1 minute chart. The daily chart's on the left in blue, and the 1 minute chart is on the right, the bigger chart in black. All of these levels are struck prior to the market open. Today was actually a little bit different. This upper trend level was not. That was struck after, because of the strength. We were looking for a potential short a little bit higher. So that's the only, it's very rare that that happens on this channel. All of these levels are put on the chart 30 minutes prior to the market open. And then I design trade plans surrounding these levels with contingency plans, meaning if it doesn't work out, I have a way to manage that position. So then not only am I prepared, but any trader that is following along is prepared as well. So preparation is always key. So now let's discuss this trade. So if we take a look at the daily chart, we can see that we're quite extended. Okay. Now, what happened on Friday? Well, first, Thursday ends up pushing through this lower trend, and it closed really, really strong. Friday opens up, pops, sells off, kind of like a doji candle, a weak doji candle, kind of signaling a little bit of a top. And there's a lot of traders out there, retail traders, that will see that as a sign to short it, and then basically they'll hold over the weekend. And there's a lot of information and news and catalysts and everything else that can come out over the weekend. It's a real bad move. So not only are you holding over the weekend, multiple days, but even holding overnight, a lot can happen. And if you're basically determining your trade, especially when you're holding overnight, you're exposing yourself to a lot of risk. And it's what ends up happening is things change overnight and it gaps up. So we end up being quite strong and we start squeezing out a little bit pre-market. Now, there's obviously another catalyst as to why it is very strong, but that is a big part of it. It is shorts holding overnight, retail shorts specifically holding overnight or over the weekend. And then they get caught off guard because this looks like it should sell off, which is a huge mistake. Market doesn't have to do anything. It doesn't have to should anything, right? So it's obviously a problem. So the market was incredibly strong here this morning. It was incredibly strong during pre-market. And then once the market opened as well, we take a quick pop, it pulls back and it kind of holds. Now it ends up having some nice range both ways, both up and down. And as a day trader, I can take advantage of that. So when I look at this chart, and I'm going to zoom in a little bit here into kind of that morning action, there's no area to go long. Now, you'll see this lower level. This lower level, what I was actually, the trade plan was when we opened, I didn't want to go long here. We're too high up. There's nothing to risk off of. You would have to risk so far down, and we're so high up on the daily. And I know that that's relative, but it's not something that I'm willing to do. I don't look for longs when we're extended at highs at the daily chart. It's fucking stupid if you're doing that. Sure, today you could say that you would have done well in a long, but ultimately it is a losing strategy doing that. Now, I'm not saying that I won't go long into a lower support level. Absolutely. That's why I have this lower support level. If we would have sold off, it would have been even this here, right? At this 657.41 level right there. I would have went long into that. But up here, it's too high. It's too extended. It's very easy for people to freak out if this level breaks and they're in long from pre-market or even taking this. As soon as that breaks, they're going to freak out and it's going to sell off. And it's not worth taking. So there's no long. If there's no long, what do we have to look for? Well, we can only look for a short. So we're kind of limited. So anytime you're forced into a situation, and this is something you could definitely take a note on. If you're, and I use the word forced kind of loosely, it's just a way to put it. You're not forced to do anything. You can not trade at all, but there's always opportunities. But if you are, in quotes, forced into only having an opportunity on one side of the trade, meaning a short or a long, but only that one, what I suggest you do is you take it in increments. Now, I'm a huge advocate of being an incremental trader to begin with. You're just looking for those first reactions into technical levels and you pay yourself on that pullback. That's it. You can always reassess after that. It's one step trading. Okay. It's one step at a time. That's all you're really looking for. It's the fastest, best ways to grow your account. It's the best risk profile in your trading. It's just the overall best strategy to in general, right? So when it comes to this, I'm looking for incremental trades. I'm looking to get in and get out. That's all I'm really doing here. And if it wants to come up a little bit more, that's okay. No big deal. So very first trade here, I looked for this trend, this pink level. It is a major mini trend right there. Okay. So what I wanted, because we opened, we popped, it pulled back, and then it came up to retest that level. It is what I call a head bump. Now, I even said we could take that, but you need to be aware that it is dicey. So size down. So it pulls, it holds, and then it pushes that little bit further. This is just weak-handed shorts getting squeezed out. Now, if you take a look, it only went up 26 cents from your entry. So there's no risk there, right? So be patient, let it come up, add into that, and then reap the rewards. And that's exactly what I did on this first trade. So got it all the way back down to morning lows. So some of you might be asking, well, why didn't you go long into those morning lows? Well, for the same reason, if we were down at lows on the daily chart, that's exactly what I'd be doing. I'd be averaging in on this bitch heavy, but we can't be doing that. We're just up at highs into major resistance. There's a lot of resistance up here. There's this trend here followed by this trend here. There's a lot of resistance, folks. It is not worth taking. So that was the first trade. Then as we sell off and we come back up, it's right into a potential double top. Okay, it's got to get through that first and then this. So start averaging into that secondary trade. And I'm fine with it wanting to go higher because there is another resistance level. So essentially work that trade up into that resistance level. And then again, just like before, you reap the rewards of trading properly. So secondary trade taken, executed, enter, pay myself. So really nice trade. Now we're going to move this over a little bit because right in and around 10:30, so right in this area here, another opportunity into that level, enter, pay myself, and then that's it. I got tired of this thing pissing around, and that's essentially all it did pretty much all day. Is it pissed around? Sure, it ended up selling off later on, but I'm not holding until when did it finally really start breaking? It would have technically broke and then retested right here where my cursor is at 5 after 1 in the afternoon. I'm not interested in that. But what I do want to point out to you guys, when you use these levels, this actually traded very clean, right? So comes up, tests, pulls back, tests, pulls back, gets above, pulls, holds, tries breaking out higher. This is actually a signal candle right there. That's a lesson for another time. And then it pulls back, tries to fail, comes up again. It could not break this level here. That's another big signal. So if I was working a short, like working this chart like a motherfucker, I'd be all over this. But simply put, not interested on a day like today. And I made that pretty clear. But it fails that trend, keeps coming up and testing, testing, testing. It can't break any higher. It actually gets a little bit higher and then immediately fails, tests again. And then once this, you see this overall trend on the morning right in there. Once that breaks, you can even see a quick little retest. So it fails that trend, comes up to retest it. That's pretty much all she wrote right there. That's another little piece of the puzzle. So if you focus on these charts, and this is why it's so important that you get to know these charts like the back of your hand. I see a lot of traders out there, they're trading 1,000,001 different stocks. They use scanners. If you're a trader and you use scanners, you are doing it wrong. That's not personal opinion. That's simply experience speaking. I'm someone that used to trade with scanners, and my odds and my hit rate have dramatically increased by focusing on 4 stocks. And then we went down to 2, which is SPY and Qs. Because the rest, it's like, why get to know so many stocks? You don't need to. You don't need to at all. It's about focus. When you get to know each one of these stocks, so let's say you wanted to focus on Apple or you wanted to focus on AMD, that's fine. But those have definitive personality. Okay. And just like everything else, they will go in and out of style and they will start trading kind of irrationally. It's almost like they fucking fell off the wagon and they get all fucking wonky for a bit. That's kind of what happens. But SPY and Qs, they're always the same. Sure, there's going to be days or weeks where there's a heavy catalyst going on where it doesn't want to trade quite correctly, but it's very short-lived. Okay. So if you get to know 2 stocks or ETFs out there, in the market, it is SPY and it is Qs because those both generally trade hand in hand. And when there is divergence between the two, meaning a difference in the action, that tells you a story. You can see it. And if one holds support, the other will hold support. If the other one hits resistance and fails that resistance, the other one will come up and test that resistance as well. So you actually increase your odds when you line those two charts up. Risk is the only thing that we can control, right? And everything boils down to risk. So again, if we know this as traders, why not lessen your risk profile, get it narrowed down, and quit fucking around with scanners and chasing penny stocks and all this other bullshit. So I've got a video that's coming out here. It should be out this week. It might even be out as early as tomorrow evening or tomorrow morning. I've got a lot of people that ask me about futures, and I've got a lot of people that ask me about Forex. You're asking that because you want to get involved with one of these funded accounts. What you don't know as an American, when you trade out of those funded accounts, it is illegal. And I'll explain why in that video. So you're going to want to watch it because you're going to want to protect yourself. Even if you have been paid out right now, maybe you have been paid out, you made some profit and you got paid out, that will absolutely come to a screeching halt. And once you start making money, you're going to have to explain yourself to the IRS. And you can look that up. That's not me just making shit up. They are illegal to trade because of the type of contract that you're using. You're not trading stocks. You're not trading contracts like the actual contract, like the ES or the NQ or any of that. You're not actually trading the real contract. And that's the little kicker right there. So what you're doing is illegal and you are going to get fucked. So there is a better way of doing this right here, what I'm showing you. Trading stocks via entering with options. If you are underfunded, this is the way to do it. So quit fighting me and quit trying to get around the system and find a better, cheaper way of doing it because you're underfunded. Simply work hard, save your money for a proper trading account, and get in with your money because you're giving your profits to someone else. Number one, they take a certain percentage. And number two, what you're doing is illegal in the United States of America. So watch that video because there's going to be way more information than what I'm giving you right now. And it's going to be a good one. So that should be out possibly tomorrow morning. Have a look for it. Okay, guys. If you want to learn how to become a professional trader and do this properly and work with a coach that actually gives a fucking shit whether you make it or not, come to tricktrades.com. If not, cool. Enjoy the free shit. It's going to take you forever to get there, but that's on you, man. I've got 1,000 free videos for you. That's why they're there, for people like you. And if not, come to tricktrades.com. Adios, folks. Have a great evening.